Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Well, good day, everyone. Ira Epstein with your metals market update. And this is for Tuesday, the 15th of August, 2017, just after 2:30 p.m. Central Daylight Time. Wow. You know, last night when I was writing my letter, I told people in it that North Korea blinked. And I said, be careful because those safe haven plays may come undone. And one of the things I wrote in my letter last night was I thought that the gold might make a run back towards its 18-day average of closes if I was right in my scenario. We're going to review that chart in a minute, and you'll see what I'm saying. Now, Liberation Day did not bring on, so far, threats from Kim Jong-un against the U.S. Yes, we're the people that they're going to grab us by the throat, and they're going to kill us if we do anything to provoke them, blah, blah, blah. The problem is, next week we're going to provoke them. The war games begin with South Korea. So this respite that we're getting, you got to take it all into account and understand there's other games at work here. And one of those games is going to be these war games. Is that going to set anything off, or is he going to let that go by him? I don't know. Our presidents talk tough like no other president has spoken to a North Korean leader that I can recall. And folks, I've been around a while, and you have a man that says his mind. You may not like him. You may not like any of that. But I think Mr. Un listened to him. And that is the important thing. I don't think he's backed down yet. But I think that we bought time, and we'll see where this whole thing goes. In the meantime, we saw the dollar rally. The metal markets get hit across the board. Stock market pretty stable, but that doesn't mean anything. It's always stable, it appears. We saw the sell-off in the bonds and notes due to this. Remember, these are all safe havens. The yen down 76 points. So the general scenario was that we took a bid out of the market as the tensions calmed down. This was the week you could have gone either way. It appears that for the moment, at least, things got calmer. Now, when we look at the weekly chart of gold, you're almost trading either side of this 18-day average, which has no real direction to it. It's almost just lopsiding sideways, and so's the market. You get a thrust up, you get a thrust down. That seems to be the overall play. When we go to an area chart of closes only, you've gone from 1262.60 up to 1294, and now you're coming back in, giving up probably anywhere from a third. Maybe you'll get a 50% correction or more. I don't know, but you're in the corrective state. You see that pretty clear when you're on the bar chart. This whole play began right here, by the way. When you had an outside day down and you take out the high of an outside day the next day, always be careful. That means you've caught a group here. You always look to see where the market's at in terms of window envelopes, Bollinger Bands. For those of you that have taken my charting course, you know how to work those. Those of you that don't, well, maybe you should take the course. You get an understanding about it, and now you're pulling back a little bit. When we take a look at the swing line study, this is interesting now. If the market doesn't come down under 1259.80, we could get a setup where we make a higher low and get a resumption of the uptrend. We could also, in this no man's land, get a rally tomorrow and then start down through this low again and get a new downtrend setting up. This means we're nowhere. You're absolutely nowhere on this chart right now. Where did the break stop today? This is why I wrote what I did last night. I want you to look at the 18-day average, 1272.60. Look at today's low. So in looking at it last night, I figured if the market lets go, you've got two layers of support, 1263.90, the 100-day, and the 18, and the market's over the 18, so maybe it'll find support at that number. Let's talk about where the market failed. It failed at the upper Bollinger Band. Bollinger Bands are an algorithm designed to keep the market trading within them. Yes, the market can get outside of them, and it does 5% of the time. But here is a market that got up. We went through a weekend where no further, I think you'd agree with me, no further tensions were coming out between North Korea and the U.S. The market waited on it, And then last night it decided to begin to break back down. And this was after, and you had the news, this was after the North Korean president said that he's going to wait, and if the U.S. does anything wrong, because he already had the missile plan from his military, he will unleash them. Okay, but he blinked. He didn't unleash them, and that was pretty clear, so you've begun that correction. Remember, that correction now, it's already out of the market. Please understand that. In the gold ETF, you're overbought, momentum coming down, look for support at the 18-day average of closes, and like the gold futures, the resistance was the upper Bollinger Band. GDX, the same thing, but the GDX today, it's interesting what it did. It came down. Notice, if we come back a day here, you have the 18 and the 100-day average the same number. Today you had a crossover where the 18 got over the 100, but it occurred on a day where so far, at least, we're not closed yet, the market's going to close under both numbers. That, to me, is not a valid crossover. It's one I'll pay attention to and look at, but normally when you have that happen, for it to have power, the market's up and over it. So I don't know what that is. I'll call it a kiss. Momentum's also pointing down instead of up. So you got divergence pointing down here. You have a bullish crossover and prices under the 18-day average without a trend. You have a higher high and a lower low than you had before. I don't know what to do with that. In the gold-silver ratio, you made your break low, and now you've gotten a correction in it. So silver is now seen where it had gained. You got down to 74.9 ounces. All of a sudden today, you got your bushel basket. You got to throw in another 1.31 ounces of silver to get 1 ounce of gold. Yeah, you got to add to it, and you're going to have 76.3. So silver is losing to the gold. You can see that on the chart. The market stopped at the 100-day average, the upper Bollinger Band, and if you ran the 200-day, I promise you, it's going to kiss 2 days, 3 days ago's high there, and that's what happened. So we've pulled back. You're in a downtrend in terms of the swing line. The market 18-day average is 1674.60. Look where you're trading, literally against it, and that so often is the case. In the copper market, I'm surprised you haven't hit the 18-day average yet. And when that happens, that you don't, after you lose an embedded reading, often, the word is not always, it means the market's acting stronger than you might have thought it would be. I still say these two will hit very shortly, could be as early as tomorrow. I don't care when it hits. What if it doesn't? Hey, if it doesn't, I'm just plain wrong. All you got to do is get back over 294.10, and guess what? The market will again have and maintain its pattern of higher lows and higher highs. It lost it temporarily. What do I mean? Well, my arrows are showing higher lows because you had the higher high. Do you disagree that all of a sudden you've got this lower high? Actually, if you were to close under 289.47, you'd get an all-out sell signal. Why? Because the market's got momentum pointing down. You'd be closing under the 18-day average. You'd have the lower highs, lower lows. So that would confirm a sell. I'm not telling you where to go short. I'm not telling you where your stop would be. That's not my point here. I'm saying it would convert the market into bearishness. In the platinum market, if we take a look, let's go to yesterday. I want to just get to yesterday. There we are. At the close of business, you closed near the low. You were still bullish. You had the higher lows, the higher highs, but I think you'd agree it has run the upper Bollinger Band for 2 weeks or so, and all of a sudden you're losing that momentum. Last night when you opened, you had opened underneath yesterday, actually about even, and then you started dropping, and you immediately lost it. So I was looking for the 18-day average today, and you got it. Now, also, this market came down and made a low under that low. So couple of things have happened. You stepped out of the bull trend because now you have a higher high and a lower low. Number two, the momentum is now pointing down all of a sudden. The embedded reading is gone. Number three, you've already hit your downside target. Doesn't mean you can't go lower, but when you hit that 18-day average, that's all I was looking for. And notice it. Got through it by $1, and from there it closed basically $12 higher than that. Interesting day. In the palladium market, same thing. Lower highs, lower lows, momentum turning down. The market saw a low of 874.40. You tell me what that 18-day average is. 874.58. right to it, and the market's now back into a neutral state. Dollar index. If you knew nothing else, let's do this. And by the way, folks, come September, I'm probably going to start live webinars. And if you're a student or my research person, you'll be able to get in. This year, I may not let others in for free. My students and my subscribers, they will. I might charge a small fee for other people to come in because you can ask all the questions you want and have fun with it. I'm debating with the idea because so many people love to ask the questions. They have a ball. I tell you, just bring any chart, give me a symbol. We'll throw it up there, and away we go trying to dissect it. It becomes a lot of fun. Okay, but you have a pattern of a higher high, a lower low. Do we agree? The market yesterday sitting right at the 18-day average. So we're not trending. We had been in an uptrend on the swing line, but we were staying all this time under the 18-day average. So I'm watching this trade and figuring, okay, if we clear 93.78.5, the upper Bollinger Band comes alive. If you get under this low right here, this day's low of 92.83, then the 92.51 comes alive. Momentum is trying to point up, but you're still under the 18-day average. You get over the 93.78. Look at the number it went to, right up to the upper Bollinger Band. So those are the tricks of the trade that you look for and things you teach yourself. But if you watch how I set this up, and that's why I love the charting course that I did. I teach you how to do that. It's almost like flying an airplane. I did fly an airplane. I went for all the courses, did the whole thing, did my flying. And the one thing I tell people is you don't check your engine, your tires and all after you're in the air. Before you put on a trade, you have a checklist of things. You look at it. And what I do in the mornings, every morning for my subscribers, what I do is I review 40 charts, and I throw out the whole day's activity for them and get them ready. And I'm allowed in these particular videos to say, buy here, sell there, put a stop, here's your profit objective. I'm throwing idea upon idea out at them. If that's something that you think might help you, do one of two things. If you haven't tried it, don't pay me for it. Let me give it to you free, and you see if you like it. If you tried it before, the season's coming. This goes 30-day subscriptions at a time, not month by month, 30 days. So subscribe. It's that simple. You can go to our website, www.iraepstein.com, for my research. If you haven't tried it, call my staff. You can go to our website. You'll see a carousel of free offers. Let me get you set up. You can click up here if you're watching me on YouTube. The icon that you see here will bring up the form. Or underneath us, it says, click here for Ira's free offers. But with September coming, with traders in Europe coming back from vacation time, what better time to get yourself in the saddle, get yourself ready, and get ready for that first flight instruction. How's that? I'm Ira Epstein. You have a good day, and I'll talk to you later.